Hi, Matt McAleer, Director of Equity Strategies, December 30th, just before the close. I'm with the Moose, John Mousseau, President, CEO, more importantly, Director of Fixed Income. We're going to get into fixed income in just a moment. Closing up the year, this week in terms of equity action, fairly flat. December, down a couple of points in the S&P. Moose, what did you see in terms of bonds?
Bonds this week, Matt, backed off. After a start to a promising December, we saw this week the 10-year bond was up from a 360 to a 385, the 30-year bond from a 370 to a 395. Two-year bond really stayed at around a 430. I think what's important to keep in perspective is that you're still a ways from the highs that you saw back in early November, when that 10-year bond was around a 425, 430 in that area. So it's really a couple of steps forward. We saw yields come all the way down to below a 350. You've backed up the 10-year now to about a 385. So you've given some of that back. There is no question that some of this has been on the back of the Japan bond market with yields going up there. And we saw this last week. It's been a continuation of this week. And you saw the Japanese 10-year bond go from basically 25 basis points, doubling, more than doubling over 50, and then coming back down, but going back up around 45 basis points. So
they joined the party.
They joined the party.
They wanted negative rates forever, and now they've joined the party.
Exactly right. And if there's anything that's you can say that's good about the end of 2022, where we've seen a real terrible bond market this year, it's the fact that the idea of negative rates has pretty much been put to rest, right? And we know in the long term, that's good for the banking system because it's very hard for banks to make money in a negative interest rate environment.
Right. Good info. Couple things that I wanted to discuss, not so much market related, but more in terms of how a trader and investor should look at 23. And most of that surrounds self-improvement, right?
Right.
Markets are always there. Markets will always be here. Things will work, things won't work. Let me go over a couple of things I have on my screen in my office that I want to just share with you. I remind myself going into 23, but it's something you should be saying and working on a weekly basis. Study the other side of your trade. Very important. Some older time traders would say, know the other side of your trade better than you know your side.
Right.
That helps you to not get overly confident in positions. 2, fight recency bias, right? That doesn't matter if it's
Always.
Fixed income, commodities, equities. Recency bias is one of the toughest things to overcome. And in terms of what we saw this year, the longer you held on to, for example, growth, the tougher the year became.
Absolutely.
Even though the last 10 years rewarded you for that, that recency bias became so ingrained that many investors and traders just kept leaning on that growth trade.
It's hard to dig in.
And we had a good dose of growth going into 22 and still have some growth.
Right.
We're not it's not a polarity here where we're all of one or all of the other, but we were able to introduce enough value into the portfolio to live to fight another day. And that's something that often traders and investors forget.
Absolutely.
You don't know that your next set of trades aren't going to be the best trades you have made in your lifetime. You can't make those trades if you've blown your capital.
That's very true.
You know, capital is dear. Capital is to be preserved. So working on our mentality going forward is always important. Finally, and this is a variation, respect what you don't know. You don't have to have an opinion on every wrinkle in the market, on every wrinkle in the economy, on every global macro wrinkle.
And the bond market's a perfect example of that this year, where, people saw the inflation in 2021. The Fed didn't do a thing about it. You got to 2022, the Fed decided to do something about it, start to raise rates. So you actually got punished in the bond market even as inflation was slowing down. And you didn't get punished last year in the bond market as inflation was picking up.
Right. Right. Interesting. Interesting. So keep that open mind is what you come back to in terms of looking at trades or investments. So as a quick wrap up on where we are positioned within our portfolios, still fairly defensive, still with a slug of cash. I like to use the term Sittin chili. By the way, if anyone knows where Sittin chili comes from, send us a message on our YouTube video. It's a specific term that if you're a fan of this sport, you'll know exactly what I'm talking about. But we're sitting chilly, we're looking for opportunities, we're looking for reasonable entries, and I'm looking forward to 23.
Same here.
So don't forget to like, comment, and subscribe so you can follow along with our weekly videos. John, you have a New Year's wish?
I have a New Year's wish that everybody forget 2022, look forward to 2023, and enjoy the bowl games going forward.
There you go. Have a great weekend. We'll see you next week.